welcome to Concrete Conversations, the Indian real estate podcast.
The commoditization of real estate is a relatively new concept in the Indian market, but it's a concept that is fairly common in more mature financial markets.
On the private equity side, one of the sectors that has been at the forefront of this commoditization in India is fractional ownership.
Today's guest, Mr. Sudarshan Lodha, is the co-founder of the tech-enabled fractional real estate investment platform, Strata. Sudarshan has over 9 years of experience in real estate and private equity law and has represented over $1.4 billion in investments.
So what are the gaps in India's personal finance market? What does fractional ownership offer investors? And is real estate the right investment for you? Get ready to find out how real estate could fit into your personal finance plans and a lot more in today's episode. So, hi Sudarshan, welcome to Concrete Conversations. We're really happy to have you here today.
Thank you so much, Yash. Thanks, Akshay, for having me here.
Usually we start off by asking our guests a little bit about their journey in real estate. So I thought we could pose the same question to you, especially since you're the founder of a company in a relatively new vertical within real estate. So with that in mind, I just wanted to ask you about your journey in real estate and what led to you kind of founding Strata.
Okay, cool. So I can start by giving probably a little personal background and then move to the career background as such. So born and brought up in Chennai, part of a Marwadi family. So you only hear business 24/7.
Right.
Whether you're when a wedding or at home, people are only talking about how to make more money as such. Right? So that's pretty much how I've grown. But thanks to my dad and my uncle being involved. All the summer vacations I used to go to office to understand things, and they were also kind enough to teach me multiple things as such. In fact, to a point where they hooked me on to Economic Times and NDTV Profit back then, which I believe was the only channel which used to cover a lot of this stock market, capital market space.
Yeah.
Completely hooked on as such.
Right.
And that's when, the business interest peaked in earlier. In terms of real estate, Marwadis, when they make money, that's the only thing they invest in also at the same time to generate rental income. So I've seen my father having this clear mindset that, hey, whether business is there or not, I'm on a mission to create equal amount of rental income which can sustain our livelihood as such, right? So this was his mindset. But again, with limited capital, you can probably add an asset every 3 years or 4 years, right, at max.
Right.
So I could realize from a standpoint that capital is the reason why you can't scale this up. And from a family background, being a little traditional, we were very averse to borrowing money because one of our core businesses was lending money to the world. Why would you borrow money and lend?
Right.
But in today's world, the way things are changing, as wise as it may be, but you may miss the bus.
Right.
So that's how times have changed. So it's important that we are also, keeping pace with it.
Right.
So I always wanted to do something out which is more scalable, where technology could be implemented as well, etc. Something which was there in mind. Now, how technology came in is I studied law, was into private equity. Earlier part, I was into litigation for 3-4 years.
Right.
Decided to switch my legal career into private equity law from litigation into real estate. And so private equity was fun. Then moved into technology private equity for a good stint, became counsel for IIT Madras for all the incubation cell and all the companies which came out of IIT Madras. Likewise with Kharagpur and a few companies with Pilani later. So that gave me a perspective of how technology is and how it can be scaled.
Right.
So that's been the journey as such. And then Strata happened when Priyanka and I, my co-founder, had some savings which we wanted to invest in Bangalore. We moved to Bangalore from Chennai 5 years back. We wanted to put some savings. Most of my friends were from Chennai. I didn't have anybody in Bangalore and nobody understood the Bangalore real estate market. So we obviously falling short of funds to acquire. We asked all our friends, are you interested to buy, etc. Nobody was keen and then we missed out. So that's when we figured out how do we solve for this where good assets, just because of capital or lack of understanding of a market, is getting slipped out. Whereas in that local market, people are investing very active, right? So going deeper is, how Strata started.
Right.
Right. But I love the fact that you touched upon private equity law, because one of the things we've seen over the last few years is a huge influx of private equity in real estate. And before we get into the heart of the conversation, we wanted to get your view on private equity investments in real estate. Could you give us an overview of the real estate PE market in India and where fractional ownership with Strata fits in under that umbrella?
Great. So let me give you a little China story first and then come to India, because China's really changed the whole real estate scene in the last 1 to 2 decades.
Right.
So it's great to learn from that to understand how India, who is right now on the cusp of what China was probably a decade back, we would see. So in the Chinese commercial real estate market, 80% of the money which pours in is all domestic capital.
Wow.
Right, so it's all Chinese who are investing into Chinese real estate, commercial real estate, etc. It's only 20% or maybe 30% foreign capital, which is there in China. In India, on the other hand, it's 80% foreign capital and only 20% domestic capital.
Wow.
Right, so clearly, prima facie, private equity has been pouring into India in a large way. Started with office. Right now, you're seeing a lot in warehousing and industrial parks and data center, which is going to happen in the next 2-3 years as such.
Right.
And they are mostly all these pension funds who are investing. So they are very, very long-term investments, very patient capital as such. Like, for instance, if I have to take India as an example, our average age is 30. Our pension funds in India are close to about $300 billion with the government as in treasury.
Wow.
Which is not investing into commercial real estate, but investing into different bonds, whatever it is, right?
Right.
Now, for us to actually tap that pension money, we are 30 years away, because we are 30-35 as average Indian age. Pension money is required post 60.
Right.
You rather invest into these long-term investments rather than having that money parked into some bonds of the government, right? But look at Canada, look at US, look at Singapore. They realize that, and they're pumping money into the Indian commercial real estate and owning half of India right now, right?
Right.
Yeah.
And where are Indians investing as such? They're buying residential apartments here.
Right.
Close to about $40-50 billion of residential real estate gets sold every year. It's almost 50% is end use, 50% is investments.
Right.
So you're talking about close to $20-25 billion every year getting parked into residential real estate as an investment, hoping to make that 2% returns, which is not even meeting inflation in today's world as such, right? But why the gap is because there's nobody who's solving for that, because the people we are targeting as such are people who have that money, are people who have 25 lakhs to about 5 crores of money, but a good commercial real estate in a Bombay comes nothing less than 30-40 crores.
Right.
Right. So this price gap is a lot. So this is where we realize that this is the real problem why domestic capital is not getting poured into the commercial real estate space.
Right.
So this is where we are coming in as a platform, trying to bring in the domestic participation and make this a more viable option for them rather than the residential real estate they've been investing into. And also, I would say to some extent, compete with these foreign capital who owns 80% of India's real estate anyway.
Right.
Right.
No, that's fantastic. And like you said, in India, somehow people are the primary way that people know about real estate investments is buying under construction residential. So since you were one of the first players in the fractional ownership space, was it a bit of a challenge to educate investors, one, about commercial being a viable asset class for them as an investment, and second, about the fractional ownership product itself, that this could work for them?
Honestly, a great question, and something which I tell everybody, that we are first an edtech company and then a fintech, prop tech company as such,
Right.
because we are constantly educating people. Pandemic was to some extent a blessing to us, because the target audience I have was at home. Getting someone's 30 minutes during the pandemic is 10 times cheaper and better in today's world, getting that 30 minutes, because people are busy and they have all the things to do in the world as such, right? So most of our investors have been patient, have been hearing us. It is a new concept. to them. When I say educating, people's earlier perception about real estate is touch and feel, get validation from 4 people.
Right.
Like, for instance, Akshay wants to buy a house, he'll go show his family, he'll show his friend, he'll show his wife, girlfriend, whatever. And then if everyone says, yeah, it's a great house, only then. Even if one says, no, this is not great, the entrance is bad, Akshay's mind changes and he says, no, I don't want to buy it. Right? So that's been the mindset, typically the way real estate businesses have transacted. Again, it's understandable because the transaction volume is very high. But here we say, hey, no question, it's an online account transfer. You get your ownership and you start generating rents and stuff. So having said that, educating has been the only thing we've been working on. First with the investors that, hey, you could buy online. So it's like a huge customer behavioral change where we are saying, hey, everything can be transacted. You may be in Bahamas enjoying your holiday. We list an asset on a platform. You can say click, done, invest and start owning the asset in spite of you enjoying your holiday as such. So this is one. But at the same time, it's also educating the sellers, because the sellers also don't believe that something like this exists.
Right.
And you have the capability to buy the asset. So the early first 10 assets literally have been convincing people with all sorts of stories and getting the transaction in place. Now we have a portfolio close to $100 million. So now the portfolio speaks for itself, and obviously the space has evolved. But back in the day, 2 years back, this was a whole lot of problem, because the whole concept was so new, and it's still so new that not all the tenants or developers or sellers still understand this structure of acquiring assets, unfortunately.
Fair enough. I must say, Sudarshan, I feel a little a bit of chagrin, because I feel like you've reduced my few years of experience in the real estate industry to someone else's touch and feel from friends and family crowd-funded opinions. But I think you've touched upon some very important points, because it's about decision making, right? And it's about comparing options that you have for investments. And the investment landscape in India today is flooded with so many options. I mean, even if you just talk about real estate, but if you expand that into a more financial investment sense, there's so many options there for the Indian consumer. So can you give us a sense of who the right target audience for something like fractional ownership is in terms of risk appetite, age, all the demographic information, etc.?
No, absolutely. I think you touched a very important point. Having so many options, but I on the hindsight, people really just don't know where to invest. So if you say from an India context standpoint, I think we are the most underpenetrated or the most uneducated personal finance country. So when I say uneducated and underpenetrated, is because people in India mostly talk to friends and family and or hearsay, and then take their investment calls. Right? Someone comes and says, no, just go buy Dogecoin, it's the best. I've made 2 times the money. No rational. What is Dogecoin? What is it made of? What is the technology around it? But people just pour in money.
Yeah.
Right? And I've seen my friends doing it. On WhatsApp group, somebody coming and saying, buy this share price, it's amazing. And I see people buying.
Right.
And suddenly if the stock price goes up, they'll all say, hey, thank you so much for recommending. But nobody talks about when you lose money as such, right?
Right.
But anyway, coming to the point on who is this asset class meant for, I think it's meant for people who already bought their own house. I strongly believe you should buy your own house.
Right.
In spite of a residential real estate not being the best of investments to make for, but still, it's a sense of security. It's also a sense of pride that, you own your own house. So you should always buy your own house. So typically, people would choose picking up their house when they're 27 to 30. It's a 10-year loan, so 5 years down, 35 to 37. A good chunk of your loan is over. Obviously, your salary's gone up as well, which means you have disposable income which you want to invest. And so ideally 35 and above, it's the most ideal for them. Not that we don't have people less than 35 on our platform, but 90% of the folks are all above 35 on our platform today who are deploying capital. So it's pretty much meant for them. See, people who are investing in CRE, they're putting their passive or disposable income, right? And are looking for passive income out of it.
Yeah.
So not necessarily that they have expertise to manage those properties also, right? For instance, if your tenant leaves, how do you identify another tenant?
Right.
Right? You may know 3-4 brokers and reach out to them and start doing things.
Right.
Yeah, For 25 lakh, we tell, hey, we'll get you Amazon, we'll get you Accenture as a tenant. Today, we sit on a data platform which has all the sale, lease, loan, mortgage data of all the properties. We have a partner platform where we have close to about 2,000 partners. What are the chances of me leasing the asset for you versus you leasing yourself, right? So this is where we are solving for that as well, that we are organizing the whole know-how, the whole management, the whole expertise, operational management, etc. Apart from just investing for investors as such, right? So ideally, it's meant for those who have income, don't have the time to manage, or the expertise, who don't even have accessibility to such opportunities. Like, I have the money, but how do I find these opportunities in itself is a larger problem. It's ideally meant for those people.
Right.
Understood. And I want to call back to something very interesting that you said earlier, is that you believe that everyone should own their own house.
Mm-hmm.
Because there's this huge debate in the real estate space on the subject of rent versus buy. So wanted to get your thoughts on how does fractional ownership fit into this conversation and compare against some of the other investment options in terms of return?
Let me give you this rent versus buy comparison, right? So if you ask me candidly, is buying a residential house great? From an investment standpoint, hell no.
Right.
It's the worst investment you would make in your life in today's world, right? However, like I said, why you should still buy? Because it's sense of security. In fact, I'll give you two examples. Two of my neighbors. My neighbors both work in large IT companies and senior positions, 35 and above, making upwards of 50 lakhs each. Now, both of them, husband and wife, don't have kids, don't intend to have kids, are living with this mindset that, hey, we earn and we live today. Which means whatever they earn, they spend.
Right.
They spend and they splurge, they go out, they do everything, right?
Right.
So when it comes to savings, literally hardly any savings as such. I think a complete mutual fund portfolio put together would be 10 lakhs.
Wow.
Imagine the kind of, if anything happens, right? God forbid nothing, but in case anything happens, hey, what are you relying on? There's nothing at all, right?
Right.
People like them should buy a house first because it is the only way they can save money.
Right.
Second approach of my neighbor, who was very clear he does not want to buy a house. Rental economy rocks. Far better because you have the ability and the agility to keep moving places whenever you want to, rather than being stuck in a place and having to manage it, paying property tax, blah, blah, blah.
Right.
But still end up buying a house because he wanted to get married. And this was a precondition that if the guy does not even have a own house, which means he's not stable, there's no security behind. Believe it or not, third world problem today. It is reality. People in Bangalore, people in Gurgaon, people in Pune today, most of the IT professionals are buying house because this is an important thing, or they're being pestered by their parents or their in-laws that no, how can you not have a house? You should have your own house.
Right.
So, frankly speaking, from a financial standpoint, absolutely buying a residential is the worst thing, but renting is awesome because it gives you the agility to shift whenever you want to. You're not stuck to something and having to manage everything as such. But like I said, there are other problems, other securities, etc. Why you should buy your own house. I always suggest people get your own house one and then do whatever you want after that, right? At least it's not anything that's something which you can always fall back upon.
Right.
But having said that, it's also about wallet allocation. I don't recommend that 100% of the money, whatever you want, you should park into commercial real estate itself, whether through me or directly, whatever. Point being, you have financial goals. You may need money in certain times. So our platform or fractional ownership as such is for those who have a 5 to 7 year investment mindset. Otherwise, definitely not recommended if you have a 2-3 year investment mindset to invest in any real estate product as such, because it takes time for a real estate market to mature.
Right.
For you to see upside returns. It's not कि 21 दिन में पैसा double वाला scheme.
Right.
Yeah, that makes sense.
Perfect. And one of the things you said, now that we know that what the typical consumer for a fractional ownership product is like, probably mid-30s, probably owns their house, probably has their own portfolio or some sort of investment. In today's market now, there are a number of options even when it comes to something like fractional ownership. So for someone foraying into commercial real estate investment and maybe fractional ownership specifically, what should they keep in mind while evaluating the different platforms out there? What should they be looking for when they're looking to get into this investment product?
I think it's a great question and something which is very, very important. The more the space evolves, there would be 100 companies who would come in. So as an investor, it's important to look at 4-5 parameters before you decide to invest. First parameter, who the promoters are, what's their background, or the entire leadership team, what's their background of running the show. Because the job of a platform starts after you invest, because that's when they keep managing, keep building relationship with the tenants, ensure the property is maintained well, etc., etc. There's a whole lot of things. So it's not just about buying through the platform; it's also about the platform's ability to manage, right?
Right.
So that's number one. Second, the investments they've made in the past. All the investments, how are they paving out? How are they actually working out? Are all the buildings which they own, are they still rented out, or everything is open? If it's not rented out, how long it's not rented out? Because that shows the capability of the guy to first choose the asset. Second, that after choosing the asset which you feel is the best, you still screw up and not being able to lease it out shows the incapability of a platform as well, right? So that's very important for you to evaluate the past performance of the platform, how many assets they've done, what they've done, etc., and how the returns are paving out.
Right.
Then third comes, I think it's very, very important that who are the backers of these platforms, right? The platforms who are funded today also matters on the quality of those investors who have backed them, right? Because that will prove two things. First, the longevity of the platform, because if the platform does not raise money, it will shut down. And then your money is also high and dry. So it's important to back that platform where the longevity is very, very large. Also, in terms of corporate governance, in terms of the ability to scout for better deals and manage your properties better, or help you sell these assets to larger investors in future, to a fund or whatever it is. That's another pie which is very, very critical, which you have to look at as well before you decide to invest. So 3-4 very, very important parameters. But in terms of CRE in general, I think points to look at is the quality of the asset, the location of the asset, the tenant quality, the lease terms, what is the lock-in lease, and vacancy in that particular market, or in that particular building in itself. So basis these 5 parameters, one should take a call whether to invest in this particular opportunity which the platform is proposing, and should ask questions. Why are you investing? Where do you see this money going out? Where do you see the returns expecting out of it? What has been the historic data of this property as such? How has it been, or this market, how has this market performed in the last 5 years? Because it's the duty of the platform to know all these things before they propose an opportunity on the platform.
Right.
So every opportunity we bring has to maximize the maximum wealth for every investor to its best possible way.
That makes sense. That makes sense. One of the things, Sudarshan, taking a step back, that I thought we could also touch upon, since we've talked a lot about real estate in the residential space versus commercial space. You said something early on which was very interesting. You said initially when the private equity investments came in, it was all office space, office space, office space. Then later it moved into IT parks. So it's a bit of a two-parter, but one being, can you tell us, under the umbrella term of commercial real estate today, what are the new options available to investors out there? And then also, what are the things that the investors need to be mindful of when foraying into commercial real estate investment?
So CRE, typical mindset of somebody when it comes to CRE, at least 2-3 years back, was only office space. Commercial real estate means buy office spaces, right? Given to IT companies, given to BFSI, etc., etc. Things have changed. At least, let's say 2 years back, when we ventured and told our investors you can now start owning large warehouses as well, given to Flipkart, given to these large companies. We brought in different kind of capital into an asset class which never existed before in a large way, right? So this is another asset class to look at. Third, retail, high street retail. As much as the pandemic, the asset class was hit, but it has bounced back much faster than any other asset class. Just go to any of the malls over a weekend and you'll see the amount of people flocking in and shopping, and a lot of activity happening in these malls, right? So retail is back in a large way. Asset classes which people have never thought could be bought is hospital assets, hotel assets,
Right.
Data center assets. These are all long-term leases. School assets. These are all opportunities which people can evaluate, or people should look at, but people didn't know such asset classes exist and how to go and find these asset classes.
Right.
right? In terms of being mindful, it's also understanding the risk to return portfolio. As such, a warehousing gives you about 8-9% return, then office gives you about 7.5 to 8.5% return. Retail gives you about 6 to 7% return. Why the 6 to 7? Is because it's on the real high street, which means there are a lot of footfalls, which means that real estate value is tremendously valuable. As such, and hence the returns are lower in comparison. As such, so that's another thing. Hospitals can give you in the range of 7 to 8%, but hospitals come with 20, 30-year leases, which means you can leave this asset as a legacy to your children and go, because a hospital is not going anywhere. In India, it's not a doctor problem, it's not a patient problem. What we've realized, it's a real estate problem. Why hospitals are not scaling up.
Right.
Why there are no number of beds is because the capital expenditure required to invest into these things are so high. And again, no large player or any player is organizing this space at all when it comes to hospital assets. Most of the hospitals are owned by the hospitals themselves.
Right.
And they invest into real estate, rather they should invest into equipment and other things which allows them to scale it up as well, right? And you see the influx of private equity players coming into hospital segments, and then you'll see that change happening sooner or later as such. Likewise, hotel and data center assets are very interesting asset classes. Again, risk to reward is high and low. Hotels can make you 14, 15, 18% just cash yield returns, forget the appreciation.
Right.
As such, and data centers are 30-year leases because as well, and right now it's a very, very big boy play only. Most of these data centers are owning all their assets through funds, but something hopefully we may bring on a platform very soon for our investors. So, but to be in terms of mindful, like I already mentioned, understand the asset class first, understand the location, the tenant quality, the asset quality, the lease terms, the vacancy in the market, and then take a call. But like I said, as an investor, when you're investing, ask questions, whether it's to me as a platform or to a broker through whom you're buying or whatever. Ask questions and understand before you deploy your capital.
Perfect. And Sudarshan, just to take a step back, since we've been talking about different asset classes and everything like that, I just wanted to ask you broadly, what would you think is the future of fractional ownership in India, especially for Indian players, over the next decade? Do you see fractional ownership companies, like you said, going for maybe different asset classes, larger capex asset classes that have longer leases, steady, cash flow coming out of them? Is it more standardization? What sort of trends or themes do you see playing out in this segment?
So I think, let me take US as an example, where the space has evolved in the last 6-7 years.
Yeah.
There are about 5-10 companies, all with $1 billion plus AUM.
Wow.
The largest being a company called Cadre, 6.5 years old, managing $4 billion in terms of AUM, selling $50,000 ticket sizes. Started from multi-family homes as a concept in the US, which works, to office space, to industrial parks,
right,
to now hotel assets, and now they're expanding across the world and starting operations in different countries as well, right? So I would say that we see the similar trend. We are starting in India. We, at least on our platform, have done industrial facilities given to factories for 20-year leases, 15-year leases. As such, again, only these large private equity funds were the ones who were owning earlier. So we came in and gave them a run for the money and, bought those assets. Second, office space definitely is one of our portfolio which we're building very strong.
Right.
We are doing our retail on our platform very soon, where investors can own high street retail showrooms leased to large brands. So that's something which we're doing. In this year, we will build at least a 200-300 crore portfolio only of retail assets as such.
Wow.
So in true sense, you see, I've made my investors buy a warehouse, I made my investor buy a factory, I made my investor buy an office space, and now a retail, and very soon a hotel or an hospital as well, which is under pipeline right now. Right? So in true sense, we are making our investors diversify their real estate portfolio, which earlier, if you had 50 crores, you can't buy 10 assets.
Right.
Here I'm saying different asset classes, different tenant profiles, different micro markets. So if one micro market does not grow the way you expect, others will grow and you'll make money.
Right. And just a quick follow-up, Sudarshan, because you touched upon the idea of diversifying within fractional ownership. Taking from the example of the US, where they are now looking at other countries investing outside of the USA, do you feel that Indian companies will at some point offer their investors asset classes that are outside of India? or how far do you think we are from that stage?
See, so from an Indian context standpoint, I think the total fractional real estate industry is now probably a 1,500 crore industry. We have a lying share of 50% of that industry right now, or maybe a little more, 1,600, 1,700 crores as such. So in terms of how these platforms would do, I think it'll be a 2 or 3 large platform industry in itself, like how Flipkart and Amazon exist. I think there'll be 2 or 3 large players who would drive the. There'll be consolidation, or companies will shut down eventually, whatever. But having said that, this is where you will see these platforms competing with the large funds with time, because their buying capability will only keep getting bigger. So we are hoping this will be the larger, bigger story. But will we look at going abroad? I think there's a lot of meat in India. We are a developing country. We're not a developed country, unlike US,
Right.
where there might be lack of opportunities. Hence, they have to go outside India. Or, the majority of the investors, we understand, Mexico markets, we understand London markets, and we are happy to invest. I think Indian investors' maturity is still a little far behind to look at markets beyond India for them to invest. In fact, what we are proud of is we've made India, at least through our platform, we made Indian investors, which was earlier a very regional investment.
Right.
We made it a national business, right? So when we bought our Hyderabad property, 44 crores, we had 43 crores outside Hyderabad and only 1 crore from Hyderabad, right? So for us, in true sense, that was, okay, now we have literally cracked something bigger than what we had envisaged, because we always thought, okay, Hyderabad means 50% of the money will come from Hyderabad.
Right.
But will we not do anything abroad? No. Maybe a year or 2 years down the line, we would start operations in different countries and look at assets in those countries, because it's about understanding. Like, this is where, in true sense, India can solve for, right? Like, hey, we build technology, we understand the space, go out in a different market, replicate it, and keep scaling that up as well.
Right.
That makes sense.
Perfect. I think with that, Sudarshan, we've covered most of the questions we had for you. I just wanted to say thank you so much for taking out the time and, giving us your knowledge. And I hope that we see the fractional ownership space in the future democratize real estate for Indian investors. And like you said, help bring domestic capital and participation to real estate in a bigger way as well.
Thank you so much, Sudarshan, from both me and Yash. And we wish you all the best with Strata.
All right. Thank you so much, guys.
If you enjoyed this conversation, be sure to follow Concrete Conversations on Instagram to know more about upcoming episodes and for some behind-the-scenes content.
For more deep dives into the world of Indian real estate, stay tuned for more Concrete Conversations.